Proud of you, Archon. Welcome everyone. How we doing? Hope everybody had a good weekend. Yep, mine was good. A great weekend for me. Got some things done around my place, hung out with some people, all around a good weekend. And a little short holiday week this week. No complaints here. Welcome everyone. How we doing? Hope everyone had a good weekend. Gonna give it a few more minutes, see if a couple more people want to show up. Welcome everybody. Like I said, gonna give it a few more minutes, see if a couple more people want to show up. How's everybody doing? See a couple people trickling in. Got a feeling attendance might be pretty small tonight, holiday week ahead. I did all kinds of good stuff. No, got plenty of those. Some of those too, but nope, none of those. Second, get to rolling. Hey, welcome everybody. Happy to have you here, Dirty River. Tonight we are doing the Sunday night scan. I know I used to do these all the time. I haven't done one in quite a while now. But I know that um, basically everybody who's done these over the years, whether it's me, Joe, Toasty's done them, 1K does great ones. We all do them a little bit different. Generally, how I like to do mine is I like to spend maybe the first, half hour or so just kind of talking about charts that I have my eyes on, what I think could happen in the market in this coming week, and then, some things that we've seen recently, if anybody has any questions. And then really for the last 20 or so minutes, even 30 minutes, however long it is, I like to check out charts for all of you. Maybe some of you have ideas of trades that you want to take, things like that. And I found that, I can often find some really good trades from all of you. And even we can talk about some trades and maybe I do or don't like the idea. Maybe it does or does not work. But I like to have these open to everybody just so that everybody gets a chance to talk. If you do have an idea, you can bring that one up to us and we'll check it out. And then, like I said, however long that is, however many charts there are at the end, I try to cover as many as I can. I'm sure that, I have the ones that I'm going to cover. I'm just going to go over. I think I only got about 5 charts that I'm going to talk about tonight. Obviously, SPY and QQQ are going to be two of them, which will take a little bit longer. Just kind of, what I think could happen in the market. And so, but then after that, all up to you what we do. And so again, with that, we'll just get started here. Again, Dirty River, happy to have you. And we are gonna first look at SPY. That's what I always look at. I think it's what everybody should look at. And I think that if most people would start their morning just kind of doing a quick little glance at SPY and seeing where it sits on the chart, they could probably find themselves having a bit easier of a time in the market overall. Not to say that the S&P is everything. In fact, we're gonna well, two of the stocks we're gonna talk about are, they're big companies, but they don't move like your average S&P companies, the big tech ones that everybody thinks of. But SPY is, for me at least, the easiest way to kind of get a grasp on the market and what the market wants to do. And then obviously after last week, we had some total insanity going on, really big moves in the market, both downs and ups. And so I think it's going to be good for all of us to kind of look at that SPY chart as a whole, kind of ask ourselves, some, some questions. Do we think it's going up? Do we think it's going down? And some reasons why we can look at it both ways. That's one of the advantages I think we have on, both SPY and QQQ right now. When you have these nice grinds up, obviously you can just kind of, this is the 5 and 13 EMA for anybody who cares. When you have those nice just grind up days, obviously easy enough to like take some trades. Consolidation moves like this tend to be what really wreck people. People have been buying and swinging calls and it's just kind of been working, maybe not huge gains, but some nice little moves up. And then when consolidation like this starts to happen, that's when people end up getting really smoked. They start buying in the middle of the range, those kinds of things. And so this is how I recommend avoiding doing that. And that's why I recommend always looking at SPY early in the day, or the big picture SPY, your daily chart on SPY. We see it all the time. People want to rush into calls or they want to rush into puts right at open. But oftentimes, if you let that first 5 or 10 minutes of volatility kind of calm down a little bit, you can find yourself in a much better trade. You didn't have to rush in. You aren't, having some of the negative effects of being in those contracts. IV's high in that first 5 minutes. And so moves against you tend to hurt extra hard on the first 5 minutes. So it's best to always just step back and look at the big chart and see where we're trading. And so for me, that's always the daily chart. It often has some very good information and it makes it a whole lot easier to kind of set the bias on the day of, do I think the market, am I going to be a dip buyer today or am I going to be a short ripper or a rip shorter today? That's what I try to find from the daily chart every single day. You can of course look at the hourly, but for me, I just find much better, stronger information on the daily chart. And so obviously today, we're starting with blank chart. We're going to do a little bit of charting support and resistance. It's not a how to do support and resistance. So I'm just going to cruise through it. If you have any questions of, why I'm putting levels somewhere, the reasons that I have interest in those places, then feel free to ask in the chat. But what I always do is, you want to look at the chart, see where we're trading, and look for levels around that area. Obviously, at least for me, I have multiple charts. Doesn't that one has inappropriate jokes on it. I have multiple charts that I trade, but today, let's see, I wonder which one I was on. Who even knows these days? Doesn't matter. So I have multiple charts that I trade on, but today we're starting with a blank one just so I can show everybody nice, easy methods to find levels around where we're trading. So obviously you really want to focus on where we are, and part of that comes into giving yourself some realistic price targets, maybe areas that you might look to buy the dip, maybe areas you might look to short the rip, depending what it is. You want to know where we are on the chart. And so the things that I always care the most about are things that I describe as dramatic highs and dramatic lows. And what do I mean by that? It's basically, where did the market reverse? When it was going up, what made it go down? And I don't want to just look for, little, pullback candles. I want to say, okay, this kind of marked a recent high for us. And then, SPY sold off, and it's not, because of that level, but then SPY sold off $12. I want to be aware where that happens, or down here, we bounced here, and then obviously we rallied. We all know that this is the election rally. We aren't, we know what that one is. And so we know that it wasn't this level that caused the bounce. However, we do know if we happen to come back to that level, that was where the market sold us to before a very big decision was made. And so, and obviously, the market loved it. And so that's how I mark my support and resistance. Then again, I'm just going to look for any of those dramatic highs and lows anywhere around where we've been trading. And then anywhere that there's kind of been some weird movements on the chart. And so with SPY right now, a level that I've been kind of mentioning to people, kind of a little bit of a sneaky one, we have a gap. It's obviously been filled, but at one point it was a gap. Then we gapped through the gap. Then this one, we just got a weird wick on it in the gap. And then obviously sold right through it again. So I'm just kind of viewing this level as, one, it gave us upside. This time it gave us some downside when it broke. Again, broke above it, gave us more upside to kind of these previous highs. You're seeing where we're going with this. So that little level, that little area interests me. And so I want to show you how I like to do these because we have two examples of this on the chart right now. And so I like to, when I see something weird like this, I like to take note of it and think of it as more of a range. Like you guys might hear me if we're trading this tomorrow, you will hear me saying 592 to 592.70. I want us, big picture. And so this is where we're getting into talking about what I think SPY is going to do. Big picture, I want us above this and I want us back above this 5 EMA. So I'm going to be looking at the 592 to 593 area as basically the do not get long area. Because you're getting long at what I consider big resistance. So if we're able to reclaim all of those, then I start looking upwards with an ultimate target of us moving back to this 600. Obviously, we know that you can't just say we're going to break 593 and go to 600. Horrible trading. If you always have price targets like that, you're going to get wrecked. So we need to look for things, places where things happen. And so one of them for me is I look right here and I can say, took a rejection, took a push up, took a break down here. When we were able to get back above it, that's when we pushed back to those previous highs. Then I keep looking right and I can say, well, we rejected pretty close to right there on Friday. So if I get the break above here, break above 593, we're looking for that move to 596.26. Reasonable enough price target. SPY can move $1.50, $2 pretty dang easily these days. Obviously, you'll want to trim on the way there, but a reasonable enough price target. Again, we get above that, and I'm going to be using this 5 EMA. It's going to 13 EMA. It's going to have moved down a little bit to, that 597, 596 zone down here. That will be the next target above there. And then obviously 600. So that's what I'm looking for continued move upside on SPY. However, on the other side of it, I again always look left. If I want to know what's going to happen on the chart to the right, I look to the left. And so again, we start back over here, left in the zone where we're trading. And this is again showing us the kind of little inconsistencies that I like to mark as a zone. So we had this candle push up. I might be a few cents off from the top of the candle. I personally don't try to get that detailed on it because frequently, you got to give them some breathing room. Any level needs some breathing room. But we had a nice push up. However, for basically, 1, 2, 3, 4 days, this was really the bigger level. This was the one that mattered. So I want to look at this as a zone. And so again, when we go back to say, okay, how do I want to trade SPY? If we're staying below this 5 EMA, we're staying below this basically 593, 592 zone, then I am going to remain short biased down to basically this 586 area. Obviously, we got $6 here. Really all we have right here is some consolidation. So the bounces could be kind of unexpected due to an area like this, but we stay below here and I will likely look for a move down. If we move down to this 586, 30 down to 585 zone, this is the no short zone for me personally. I have no interest in being short at major lows like this, gap areas, this little consolidation zone that we discussed earlier. I don't have any interest in being short down here. This is where I start looking long for the bounce again. Obviously, your stops are relatively tight here. Same as if you short up here, your stops are relatively tight. But this is the area that I care about. So now we have to think about the week that we're in, Christmas week. I'm pretty sure Christmas Eve might be like a half day. Maybe the day after Christmas is a half day. We normally have some weird scheduling. Markets are closed on Christmas. Maybe futures are open, but not a lot of trading going on. So Christmas week can be a weird one, depending when Christmas falls. We will likely see nice movement, or I'm not going to say that we're going to take a big move or anything tomorrow. But we can probably have a nice, decently tradable day tomorrow. As far as Tuesday, Christmas Eve, I think that's Christmas Eve. I don't know I don't remember if it's closed or if it closes early. Likely little to no movement because of that. Obviously, Christmas Day, nobody cares about. So Christmas Eve, closing at 1 o'clock. I just want to double check. 1 o'clock Eastern. Christmas Day, obviously closed. Day after Christmas, likely very low volume. However, Friday, the last day of the week, there's a decent chance we'll see a little bit of movement on that. As I've stated, I gave everybody my plan last week. Look for a nice move on Monday. Look for total chop on Tuesday. Wait for FOMC and let FOMC move us. Tilio and I had both kind of professed that we would likely sell on a rate cut. I don't mean to speak for Tilio, but I can 99% guarantee you that he agrees this move was not expected. We have both expected a sell-off, but we both also had places we expected to buy at and get a bounce that didn't bounce, you know? So then after that, bullish into the beginning of the year. I'm not going to say be buying every single dip that shows up and, buy calls on every red candle you see, nothing like that. But you have to remain, at least for me, because, nothing really changed. We got some information. We had an extreme knee-jerk reaction to it. And nothing's really changed. So I'm sticking to the thesis bullish into year end for me personally. Like I said, I'm not going to be piling into calls if we're anywhere around here at open. I know I'd seen futures were up, I don't know, 20 handles or so. Last I looked, 15 handles. And so nice little move up. It would put us basically right into that resistance if we opened around here. So again, SPY, nice, simple trade plan. We're staying below 592. I'll probably be looking short, at least, not long-term bearish short, just short down to these lows to look to buy the dip again. Again, break above it, look for those pushes to 596 and eventually back to 600. So nice and cut and dry trading on SPY. And then because we talked about these in my last class, and I even showed people the fibs that I had been trading. So I've been running this fib extension, and then obviously, so when you run a fib extension, you don't have to, but I like to use a midpoint. They give you the option to use the midpoint, so I always use the midpoint. And so when you go from the low up to the high, this was the election rally. Well, the midpoint that I am using is actually the 50% retrace of this. I'm not going to put it on there, but we know for a fact that's where it lines up. So we had that nice, extension push up to the 78.6. We now tried to break below, which would, fail this breakout as a whole. And we stayed above it. So I just wanted to show you this again to show you that not only does our 0% line up right here, and that's where we could actually look to, be bearish down to, at least this gap fill sort of thing that would fail the breakout officially. And then it happens to line up with our nice cluster of levels here. So easy dip by here. Then if we go up, we already had our levels. We have the 23.6 right here. So we know, again, resistance. And then, of course, again, the next, our next level up, we're lining up perfectly again with another fib. That's ideally what you want to see. And, the market does like to follow these. They aren't following fibs, but, statistics work. So I always like to check the fibs. And then the very final thing that I care about on SPY right now is, and I always tell people to check it on the daily, your SMA. So 50 SMA right here, the daily SMA, huge one, obviously closed below it 3 days in a row, technically speaking. It adds even more reason to not be long right here until we're reclaiming above all of this. So as I said, I'm not going to be the first one, jumping into calls, but if we're able to get above there and hold above some of those levels, I might look to trade it. Obviously, if we go back to Friday, we can see, we attempted to break above it, failed, attempted again, failed, attempted again, and ultimately sold. I mean, we saw big sell orders coming into the close. Obviously, nice big bounce. But it was the market was definitely leaning towards the sell side going into the open. Makes sense on the back of, I don't know, 100 point rally on the futures or whatever it was. I mean, so makes sense to have that pullback there. So that's SPY for me. Again, nice and cut and dry. Let's see, we got any questions? Oh, we got Norvin in here. Oh, yep, and he's just in here saying things. No, Norvin, you obviously just joined. I absolutely don't. Fibs are nothing more than a reference point for me. Nope, we got all these levels nice and live, from the charts. I don't like fibs nearly as much as other people do, but when you're at all times highs, they're definitely helpful. So next one we're going to talk QQQ. Again, this one will be a little bit longer, just like SPY was shorter than SPY. We're going to do the exact same thing. Look for where we're trading. Look for some major highs. You always want to know any of your recent major highs, anywhere you took some rejections where you actually had halfway decent pullbacks. And then again, look for your major lows down here. Right down there. Here. Mark your highs up here. And so QQQ, obviously, little more work, little more work to do here, just where it sits than SPY. You know, SPY, we only need a couple buck pop, and I feel pretty comfortable being long. QQQ, I'm feeling slightly cautious to be, getting long here. We have the previous gap, which I mean is honestly a level worth having on there. Lines up perfectly with our 20 SMA. So we know this 520 area, really all the way up to 521.50. I'm not a like I was like on Friday, I wasn't a call swinger on QQQ, I'll tell you that much. I mean, on SPY, I would have felt slightly more comfortable swinging long, but on QQQ, I definitely was not rushing in there to get long on it and swing long on really many of those tech names. However, always, always, always look left. So the area that I care about is, this 515 level. Obviously, we're a few bucks above it now. That's the level where I care about for more downside. And if we did have that pullback down to the 515 area, that's where I would actually feel a bit more comfortable getting long than up here anywhere close to 520. I mean, if you're getting long right here, you're definitely getting long into resistance. In no way am I bearish on tech, but I want you know, I want confirmation for upside before I get into any upside trades. Obviously, as most of you know, I don't trade short often. If I do, it's a scalp intraday. No reason to swing short or anything like that. Always, always, always zoom out. Did we have just some absolutely clobbering candles? Yes, but we are in a very strong bull market, no questions asked. So, just remaining the dip buyer all year has worked for me. And so until I get some real reasons to actually flip bearish on the market, no reason for me to be swinging short or looking for, much downside. Obviously, the bears for the first time in, I mean, six or, well, since whenever the carry trade ended, the bears finally had their laugh. So good for them. Wrong for, 6 months, but we're back, and so again, not bearish on tech, but not rushing into tech long. For me personally, the risk reward's just not there. If I'm trying to get long up here, then I got to have my stops $5 below me, and that's just unreasonable. If I get long down here, I can run the tight stop under 515 or even, widen it out to the basically 514. So $1.50 risk, I like that. $5 risk, hate that. So just for me, I won't be rushing in there long. Break above, retest, then maybe I start looking long 520 to 521.88. Then like that 524 zone. And then again, not feeling overly bearish, so we won't really harp on the downside, but 510, 515 zone is where I would be looking for bounces for sure. Okay, and so a little quicker there on that QQQ again. Oh, and then I forgot I do because this is one that I look at, so I want to point it out to people. 513 EMA. I've always used this one on short time frames over the last year, so I've really learned to like it on the long time frames as well. It's quick to pick up crosses, and somebody messaged me about this and said, because I've talked about the 5 and 13 recently. So that's what we have going on right here. We have this cross going on, and it will frequently pick up reversals of trends before any other EMA will. However, I just wanted to explain this in case anybody else has been using that 5 and 13, like I've recommended, Tilio's recommended, a candle like this messes up your EMAs for a few days. These EMAs, the 5 and the 13, you're only taking 5 days of price action into account on that 5 EMA. So you can see it's the one that absolutely cratered. The 13 EMA, I mean, don't get me wrong, it moved down $4. The 5 EMA moved down 10, so that is because this candle is one of the five that it's looking at. So this EMA combo may not be the best, and it may be an untrustworthy cross this time. We'll see. But again, break above that 21, and we're seeing that, or the 521, and we're seeing ourselves above the SMAs, above important levels, back reclaiming those EMAs. So that's the point where you start to feel a bit more safe on QQQ long, at least for me personally. Again, because we don't have much data up here, no matter really when you're buying calls at a relatively close resistance, but that's part of the double-edged sword that you have to play when you're trading around these all-time highs. So that's my QQQ feelings. Again, just for the simplified thing, really not much interest short on it unless we're giving up this 515 area. In fact, I'm likely a dip buyer from basically 515.77 all the way down to 515. And then as far as longs, you can of course try to scalp these longs, if we are able to break above 520, but you're getting into heavy resistance. Not only levels, you got EMAs, you got SMAs. So we really want to see basically the 521, 50, 522, because these will tick down a little more tomorrow, likely, for the new candle. But we we want to see ourselves above 522 for that strength in the market and to show, that potentially tech can push a little bit more. And again, I don't find myself bearish on tech. In fact, it was for the whole last rally. I mean, just to pull it up because it's some people have been talking about SPY and QQQ were going up while the Dow was putting up its longest losing streak in like 40 years, something like that, maybe even longer. And then IWM, the small caps, they were going to Hades. I mean, we're all the way back down to that 220. I mean, this isn't, we're down 10% off of those highs. We're down 10% off of those highs. And so, you know, these are the ones, and this is actually IWM. I guess we should just talk it. This is the last one we're talking for the ETFs. So, oops, I was just going to do. Uh, so IWM, for anybody who doesn't know, these are small caps. A lot of people like to trade them. We do the same thing. Of course, I should point out, I'm saying this is what I do every day. I don't chart levels like this every day. I have the levels that I care about already. So I don't have to do this every day. But once you have your levels, you pull up the daily chart, you glance at it, and you can get your feelings, instantly. You know exactly where you want to be trading with this market. So IWM, we're at a really interesting spot. Obviously, 220. It's been big rejection point over and over and over again. Attempted breaks were failed. When we were finally able to really, in the election run, when we were finally really able to get going, we were able to really rip off of it. So that's what I want to point out. The main thing that I want to point out, and this is just to give, I wanted to really cover the whole broad market tonight. So we've done tech, we've done SPY, and now we're looking at IWM, the small caps. I didn't want to go too much into Dow right now. I know that Tilly has really been covering the Dow, DIA, the diamonds, pretty good. I mean, perfect lately. So no reason for me to double do that. But IWM is the one that has now given up the entire election move. It's also the most rate sensitive market. So when we see a massive sell like this on a rate cut for the rate sensitive market, I personally think it's really worth taking note of. We saw investors saying, okay, we bought it and then obviously retraced, like everything retraced, bought it up again to these new highs, and then they sold, and they sold it heavy, and they sold it heavier than they sold tech and SPY. They were clobbering this thing for 2 weeks before the FOMC meeting came. However, me as I mean, a bullish trader, acknowledging that we're in the bull market, I started to have interest on things that have dipped the most for not a lot of reason. In fact, they've made the move that I disagree with more than all of the other moves. I get SPY and tech and everything pulling back. They could be dramatically affected by some of the decisions that come next year. And of course, IWM could as well. However, small caps will benefit from rate cuts massively, no matter what. So they're able to fight well, unless it goes really bad next year, but they're able to fight whatever happens next year a little bit better than some of those big tech names that could get demolished by tariffs or whatever, if we get those, whatever it might be. And so IWM, very, very tradable spot right here. I'm a dip buyer at 220 over and over. Anytime we've been above it, it has offered a very nice low risk, high reward trade for bounces. Here's a failure, obviously. Any other time we've got above it, you've got a $2 or $5 move up. So, and we know there's potential for more. So I'm looking at IWM as a dip buyer, and I have two places. Well, really, I got three places that I want to be the one buying the dip on it. Anytime we pull back to 220, this is one that I missed on Friday. Very disappointed in that. IWM putting in the $5, $4, whatever it is, moving a day above there is just too dang giving. Sad I missed that one. Next place that I'm a dip buyer, this 217.65. You can see this is just these were these major lows, big bounces, failed breakdowns, holding these SMAs over it the whole time. That's the next place that I have interest in being a dip buyer. However, when you're being a dip buyer on something like this, you are catching a knife. So something you have to trade it slightly differently. You need to trade with very tight stops. You're trying to catch volatile bounces when you're catching knives. You aren't trying to catch a reversal. You're trying to catch a nice move to the upside that if you make some money and you trim and you want to stick with the trade, take that trade home with you, then you let it keep going. So we have three places that we care about: 220, this 217 area, and this is likely going to tick up for us and get us up there close to that 214, 215 zone sooner than later. So it's going to be this daily 200 as well as the 215 area. Those are the three places that I have interest in buying the dip on IWM. On the other side of it, shorting it, no interest whatsoever. The thing's corrected. It's down. I mean, it was down over 10%, or 10% on the data, and maybe slightly over 10%. So I'm not a shorter at the beginning of a correction. We're down 10%. I missed this short, whatever. I have no interest in being short down here whatsoever. Is there going to be some intraday scalps to be had in rejections at any of these levels we discussed? Sure, or bounce ups and rejections off of them. Sure, but I still feel like we kind of look to be dip buyer mode. As I've said, I'm bullish into year end, beginning of next year-ish. We'll see if the bounce comes, but that's the theory I've been saying for 2 weeks, so I got to stick with it. And I want to be a dip buyer in small caps personally, because I just believe that we can get a nice little move on those into the beginning of next year. Even through, I think all through the next 4 years, small caps have a very, very good chance at outperforming, unless things start to go wrong. But so I'm viewing this 220 dip as, it's definitely an opportunity to buy, at least in my opinion. I mean, Norvin, IWM, IWM gave away IWM gave away less than 1 month's worth of gains. That's it. We were trading at this exact spot 1 month ago. No big deal. No big deal. Okay, so the next things that I want to talk about, as I said, I just got a couple individual stocks that I wanted to talk. Amazon being one of them. Obviously one of the main levels we care about, held that 20 SMA, one of the stronger tech names, one that, dip buyers have been rewarded over and over and over again ever since October. Basically, this thing has been, I mean, even before that, all the way back to midsummer, it's been on a run with those last couple earnings. But October, this thing really finally decided to put in that big, big breakout for us. And it's just been running. Easy one for me to stay long on, easy one for me to remain a dip buyer on. Obviously held the 20 SMA, then we have the 5 and 13 EMA, or 20 SMA, then we got the 5 and 13 EMA holding pretty solidly above it. And so for me, that's what I'm really watching here. I want to see us hold above there, and then hold above the 5 EMA on the daily, hold that 223-ish zone, and that's where I'm a dip buyer on Amazon. Obviously, if we get a break below there, very, very tight stop. That's why I like the trade on the dip buy on Amazon up here. We've had a nice pullback on highs. It was a strong leader on Friday. Had a pullback, had less of a pullback than some of the other tech names. I do want to go back to SPY and QQQ and talk about this. Massive volume on Friday, obviously. So Amazon, really, really nice spot to trade. It's always worrisome when you're starting to chase at these highs up here. You start to set things. Anytime I see something like this on the daily where I've got a push, I've got a second push, I've got a third push, I start to get worried on the long. So I hadn't really been trading Amazon long, all last week. It was putting in nice moves, but I just didn't want to be the one to get caught in the reversal. Of course, didn't expect this, but I didn't want to be the one to get caught in the reversal. But I wanted to retrace down here to this 5 EMA. If this death candle hadn't happened, the 5 EMA would still be up here and we would have had a more reasonable retrace to it. But giving us a beautiful line in the sand trade. If you want to widen the stop out a little bit, if you want to widen the stop out a little bit, as opposed to just, an hourly close or whatever under that level, it'd be right about here for me. 220, 228, you're basically risking about a buck on it. You I like this stop, but this stop for me would be the okay, I'm out of the trade. That's what I would be worried about. I would want to just I would be worried that more selling is coming if we give up basically that 222 area, give or take. Uh, you know, that's just me. You could, of course, dip by all the way down to there and tighten up the stop as much as, get your stop as tight as you can. But for me, I still feel most comfortable on the retrace to 223. We try to buy the dip there. If it doesn't work, we look for a bit deeper of a pullback to the 220 area and give it another stab there. So nice, simple one on Amazon. So I mean, it depends. I see a question right here. Am I talking about buying time? Absolutely. If you like the trade, you're feeling confident in the trade. If you are looking for that longer term trade and you like the potential reward from that trade, I mean, we can look at Amazon right here, obviously, somewhere around there. And yeah, it even lined up perfectly here. Obviously, on Amazon, if we're buying it around this 223, we're going to be mostly out of this trade around 225, 226. On the shorter term because we're just looking for a nice day trade, maybe even a scalp. We're trying to buy the dip right there. However, if you are looking for a swing trade, you want to have the more casual entry and say, I'm gonna be looking to buy the dip around here. Still gonna run very similar stop. You might widen, you know, a swing trader should not be stopping out unless the market is going wildly against you. A swing trader should not be stopping out based on, a 15-minute candle closing, you know, under your level. If you're a swing trader and you got multiple weeks of time, you need to use the time. You still need to have a point where you will stop out, no matter what, your maximum risk on the trade, and you stop out. But you want to widen the stop a little bit and say, maybe if a daily candle closes under that 222, that's where you might look to exit it, give it a little bit more room, let the volatility happen down there around it. And then your ultimate targets can obviously be these first resistances up here around 226, but then 230, and then obviously your new all-time highs. So if you are a swing trader, I think we're being presented a little bit of an opportunity to at least take a stab. However, I will say, if you're swing trading, then you still need to have your stop. There's nothing more I hate than somebody saying, "Oh, well, I'm down 60% on these contracts, but I got time." That's not good trading. You need to admit you're wrong because if you take the stop here, it's moving a buck against you. If you're a swing trader, we'll say a buck 50, you're losing 1.5 delta. So if you got a month of time on the contracts, you're going to lose 50 or 60 bucks a contract. That's it. It's going to likely be 10% or less of the contract. No big deal. Well, maybe you say you also like the 220 entry. You don't want to hold them all the way down to here and then have it bounce all the way back up here to see profit. You want to, at least for me and how I trade, and swing trade especially, I want to enter there, I want to stop down here, and I want to buy down here. So by the time I get the bounce back up to here, I can likely be trimming some contracts. I can cover my previous loss as well as book some profit. And then if we break above there, I can look for the move back up. So that's always how I trade it. You're much better off stopping out, when it goes a buck 50 against you than just riding at $5 against you, at least in my opinion. And it's just, that you'll make more money that way. It's the same as scalping. I mean, I apply the same ideas I have to scalping, for a 5-minute trade that I have for a week long, 2 week long swing trade. I have my rules set. I say I enter here, I stop out here, or if I don't want to stop out there, I say I know where I'm adding to the position, and I just know all of that before I enter the trade. And I mean, it just removes all the stress of it. So again, that's Amazon. Dip by mud for me, easy one. I do want to go back and point one thing out just because I forgot to. So SPY, massive volume. Volume like we haven't seen since what I mentioned earlier, the carry trade unwind. That was obviously a bit of a capitulation event. This was a bit of a capitulation event. I'm not saying the market capitulated. It was just extreme selling. That's what that means, and that's what we had was some extreme selling. Well, I often like to look to these types of things for exhaustion events or overreaction events. You'll see frequently, and obviously we had some volume building over the couple days leading up into FOMC. It makes sense. And then on Friday we had the S&P rebalance, we had the quad witching, high volume event, no doubt. And high volume event on FOMC, even higher volume on the quad witch, which is interesting. But I often like to, when we have these very dramatic spikes in the of volume in the opposite direction of a trend, something that I like to do is look for exaggeration. Obviously, we're late. We saw it on, we saw the huge volume come in on Friday, and the dip was already, I mean, they were bidding everything in the market on Friday. They bought it all. They didn't care. Just slap the ass long. And so I think we could have kind of had that feeling as I did, and I mentioned to people, be a dip buyer on this. We saw it here, massive explosion in volume. People are going to show up and buy the dip when you're in a bull market. It can work the exact opposite too. In, a bear market where we're getting clobbered, look at this massive volume pump that, and they bought it for 3 more days and then they crushed it all the way back down. And a lot of the time when you see, and that one's not super good. Oh, here's one nice massive volume pump we were down. We were basically, well, God, bear markets are fun. An $8 range for a few days after that. So I always like to look for, even here's one in a bear market, big volume push, and we get the little bounce. So I always like to look for just oddities. Here's one big sell volume, big sell volume, big sell volume, and they started buying the market. That was beginning of March. Yeah, this was them starting to buy the market and never selling it. So always look at volume. It's just a little thing that I like to look at. I do it intraday as well. Same ideas. Insane spike in one direction will often get reversed the other direction. It's one side given up. So I like to always look for that. It's just something you see. Like I said, we had the S&P rebalance. So, SPY's even, it's just wildly high. QQQ wildly high because some of those names are in there so much. So big old massive spike in volume gave us a little bit of a potential bottom set in the market. We'll see what happens. And then, okay, so that's it. And then next one I want to talk, Apple, and this will be all from me. So Apple, kind of, dip buying is undefeated. I mean, look at this like chart, it's just insanity. I mean, don't get me wrong, sold on FOMC, but like set a new all-time high on Friday. I mean, Apple is just unbeatable right now. And it's hard. You don't want to buy the tops. You don't like it might work every once in a while, but more often than not, it's not going to work. And you could get a better entry. Like you can see the people who bought the top here ultimately made money after a gap down and even a little sell to potentially buy the dip. So that's why buying the dip is always better than buying the rip. Well, Apple, again, putting in the massive rip, new all-time high, got to put it on the chart, kind of previous highs right here. This is the little zone on the upside that I personally care about. Now we come to the downside. Obviously, these lows gave us the nice bounce there. It wasn't, I mean, they're just buying Apple nonstop. And then we have very few levels here. So you just kind of want to look for where did the market make some decisions? Like market stopped heavy here one time. It stopped here, gap down, sold a little bit, ripped above it. So I like these little zones. That's all I need. That's all I need to trade. I don't need a ton of info. I'll trade the intraday price action for trims, anywhere that I'm seeing, reversals, bounces, things like that. That's where I'm going to trim, like if I buy this dip, I'm trimming here, just as a random example. If I buy this dip, I'm trimming right here. If I buy this dip, I'm hoping I get up to here, but I'm trimming anytime we get up into these wicks. So I'll use that intraday price action to tell me where to trim. However, on the daily, they're making it pretty simple for us. Obviously not if we keep ripping upside. Hold above this 254 area, look for that push to all-time high. Obviously, it's only 60 cents or whatever, 70 cents. And look for more push above it, if that comes. If we break back below here, I won't short it personally. But because I just don't jump in front of freight trains like that, unless it's like 5 minutes to close on Friday. But I won't short it. But I will look for a nice dip back down here to the 250, 251 area to again buy it long. That's it. When a chart looks like Apple, don't try to be the hero to jump in short on this thing. Is there some scalps intraday? Sure. But Apple giving us a very, very cut and dry area to trade. Stay above the 254, look for all-time high and more. If we break below there, I'd likely be looking for dips down to basically 251 to 252 area, anywhere in there to look to buy the dip with that tight stop below you. So nice simple one. I like that. No, hopefully no questions there. Like I said, really easy one to trade. Obviously super strong right now. And then love an Apple being worth 250. So it's actually putting in nice tradable moves. Final one that I want to talk about, always got to slip a boomer stock in, KO. So KO one I'm looking at, obviously very, very rough move on it. Now that people are finally trading KO, they're kind of seeing the amount of money you can actually make trading these things. So very defined levels. All I did was go through, mark our highs, mark our lows. Well, we're, I don't trade patterns. I don't know what you want to call this, a triangle, a wedge. I don't know. So very ugly sell. This was kind of as anytime health stuff comes up, KO gets absolutely clobbered. I'm sure some people are looking for some sort of head and shoulders or whatever. I don't trade that. This is all I'm looking at right here. And then I'm doing something that, I'm not going to say it's smart. I'm not going to say you should always do it. So, big sell volume on KO. As you guys know, I just told you I like to look for this kind of thing to kind of maybe say, hey, we might finally be seeing, because, this sell this whole way down was not, it wasn't above average volume or anything like that. Like ever since it started getting weak, it was relatively low volume. And we've really started seeing some volume come into it. Part of it is, part of it is RFK. He hates this kind of stuff. He hates Coca-Cola or whatever. Um, I'm starting to look for the breakout upside. I'm looking for the contrarian trade here. People are starting to talk about like death crosses on it. Warren Buffett's going to die, blah blah blah. All, like his position's done. He's losing money. He's not. He's up $20 a share and been getting $1 billion a year in dividends for a decade from him. So he's good. Buffett ain't scared. Don't get sucked into, will this be Buffett's biggest loss ever nonsense. When I start to see that, I start to look to be a dip buyer. So I'm looking for a couple more days of consolidation on KO, but I'm a dip buyer all the way down to 62. Obviously, the upper target's only going to be the 63 at first, but if we start to break out of this, whatever you want to call it, wedge, just bottom, whatever it is, we'll see some nice little upside. And you catch a $3 move on Coca-Cola, your contracts are going to pay you gigantic. A lot of people still don't realize it, but they're great to trade. And then again, if we're able to really break out, lots of upside left on this thing. But I'm starting to like a dip buy for a potential breakout this way. Obviously, could break down. I just can't short it down here. The risk rewards. Wait for the breakdown of basically what 61.90 or less, looking for a 50-cent move down. I'd rather get long here and look for the $1.50 move up to the trend. That's the better risk reward on this trade. And then you got to love it, when the Twitter people and like TrendSpider and stuff start talking about these kinds of things, saying the end is near. That is often the time they are about to absolutely rally. So another one to keep your eyes on. I guess we ran a little bit long, but let's see. We got 10 more minutes, 15 more minutes, whatever. You guys got a couple charts you want to check out? I'm sure people have some questions. So let's see. I'll go back up. PLTR. Yeah. I looked at this. I know you're so, and he asked about the double top. I looked at this on Friday, and I absolutely love a double top. God, I wouldn't short it. Like I just wouldn't. I wouldn't. I won't jump in front of this kind of strength. This is one of the best. Like it went from, it was horrible. This thing made it down to $5. The guy said he didn't care about his investors. Nobody still knows what they do. It is one of the best performing stocks in the S&P 500 this year. So I just can't jump in front of that. I see what you're seeing. A lot of people see what you're seeing. It could pay great. I'm too scared. It's one I won't short the strength in this. Even look at this. And of course, S&P rebalance likely had something to do with the fact that it traded 270 or whatever, 277, 281 million volume that day, and the rebalance had something to do with that, but still not what I can do. Thoughts on Google? Yeah, let's check it out. That thing's been just a beast there finally. Wow. Well, it's making it easy on us. Previous all-time high. That is what you trade around. Until you are seeing, a break and retest, some volume confirmation over that level, you don't long it here. Google's obviously finally put in a really nice move after just being a slug. While everything else is setting new all-time highs, Google's getting clobbered. So again, previous all-time high. That's the level that we, at least for me, that's the only one I care about. Obviously, you're going to have these little wicks above you of your 193 area. But so that'd be your safer bet for longs to try to push some of those new all-time highs again. But for me, this previous all-time high, I personally lean short biased here. Honestly, if we aren't able to see, maybe we're popping above it, you could really, you know, you could look to short this little zone here. You only got about a buck's worth of risk on the trade. Kind of like it. Put in big volume, but not big volume like some of the other tech names did. So that previous all-time high is sort of your line in the sand, but I would personally lean short for at least a little more pullback, but we'll see. Jed, I didn't see what you were talking about. What do I think about Pepsi? I never traded. The liquidity is just better on wow. I haven't traded in a long time. The liquidity is just better on Coke. But it looks like Pepsi's also getting the back here somewhere was likely the last time I traded Pepsi. Um, looks like it's getting the same treatment as Coke though. But I mean, 150, looking way back left, you got to be the dip buyer at this 150, 145 area. I mean, that could be a nice little share trade. But we do have the issue of God, but that's long time lows. We do have the issue of the new administration. Well, I mean, the president loves Coca-Cola. He drinks, I think I read he drinks 12 Diet Cokes a day or something like that. But RFK hates it. So these sweet, sugary, dye-filled names might be in for a rough go. I mean, the the chart tells me buy. What's going on in America tells me to not buy, as funny as that is to think about America not buying soda, but I'd watch this 150, 145 zone for, potential little dip entry. Did I miss you, Norvin? What'd you say? Oh, D-Dog. I see it right there. D-Dog. Yeah, I got you. Yeah, and we'll do Microsoft right after that. Old Norberto, D-Dog, getting clobbered. No surprise there. Getting just absolutely wrecked. Um, yeah, this was a chase. This one, they need that good news to get them moving. Yeah, I mean, I'm not a buyer on this thing. Ugly chart here. I mean, if I had to buy the dip, which I know you're likely only looking long on this name, Norvin, I would risk it. Like I honestly would. I mean, I wouldn't because I don't trade this name, but I'd risk the dip buy at this 146 area off of this EMA. It's really offering you a relatively tight little stop down here. Yeah, I mean, probably you'd want to give a little more a buck or so. And then push up to, trend. Yeah, probably 150. Yeah, probably that big 150 right there. Push up that 150 and trend, obviously, or a rejection. You could be a little dip buyer here, but you might be better off hoping it consolidates here and then try to catch a trend break there. Microsoft. This is one I was actually going to talk about because let's see. Um, I don't like it. I don't like it for a trade here. I meant to bring it up. We're and Microsoft puts in nice enough moves that it is tradable all the time. That's the advantage with how expensive it is. But I look at this chart and we got resistances all through here. We got strong resistances. We got strong support, strong breakout levels down here. You got a little $6 or $7 range you can trade on it. But with the volume of contracts, with the value of contracts on Microsoft, there's better places to put your money. If you're trying to catch a nice big breakout, your 15-20 dollar move on Microsoft, and that, risk reward is there. But when you're trying to trade like smaller moves on Microsoft, and you got a $3 stop and you got a $4 profit target, it's just, I don't like where it is. Reclaim this 442. I start to like it for that 8, 10, $15 move up. Get back up here, get rid of this last couple of days, and go back to the attempted breakout that it was working on. Microsoft been a bit of a slug. So really 442 is where I started to have interest on it. And then if we do take the sells down here to that, 430, 427 zone even, nice dip buy on it. Still not bearish on it or anything like that. I think dip buying is going to be rewarded sooner than later. Nvidia, another one that just not, I don't like the trade on it. I mean, yeah, I just don't like the trade on Nvidia. Obviously, you could try this like multi-bottom right here, but Nvidia has done nothing for so long. Like it's just not, the chip trade is not it, unfortunately. That's so I don't love it. Dip buys to 130 is the trade I'd be taking on Nvidia. But we push up to that 135, 136. I honestly, I typically have a pretty strict rule to not short Nvidia, but shorting Nvidia has been working great for the last few months. So there's trades in there, but it's just not one that I love. Kind of the reason I didn't talk about it tonight. I know a lot of people trade it, but just not in a spot that I love. Yeah, XLF. I was just gonna do all of the sectors. So uh XLF again, pretty held basically exactly where you would want it to hold. No questions asked. That 4750. Somebody, I even had people in voice chat were asking about the dip buy on this. 4750, love it. I think this is a sector that is, it had been struggling. It has finally really started to perform in the last little bit. I think, well, obviously selling the last couple of weeks, but we had finally some nice pushes up on XLF after a long time spent just consolidating or slow grind up, off the back of the banking stuff last year. And so this is what I have on watch here. I like it for more upside. Pre FOMC, somewhere back here, I was saying that thing's popping 50 again, no questions. FOMC had other plans for me, obviously, but I felt very comfortable being a dip buyer on it. My thesis still doesn't really change. Worst case scenario, if we came all the way down and filled this gap, I'm definitely a dip buyer down here. But I like some consolidation around this, 47.50, 48 area for a couple days to try to catch a move back up. UPS, haven't looked at that one in a long time. I'm probably not even gonna. I hate trading this fucking name. This one never does what I want it to do. It's just smoked, eh? I mean, how far back do we have to go to see some levels down here? Ways. We're all the way back into what, 2020? Probably. And 2020, 2019 levels, eh? It's never a good sign. Although the dip buy on AT&T 2 years ago from the 1995 levels was a printer. Well, I mean, your gap from 2020 is filled. That's good. Honestly, I mean, this is probably getting to the point where you try to buy it, but aren't they like trying to break them up? Man, kind of a double bottom on the daily. Sort of like a Jet for that contrarian long trade on just a beat up name. Be parabolic. Yeah. I mean, this is where you try. Honestly, I wouldn't have even liked it like if you asked me about it 2 months ago, I would have said it's filling this gap, and I wouldn't have liked it here. Here, I all of a sudden like it. I mean, where was this? Top of this was 124. Gap filled. Love to see it. Yeah. Micron. This thing cannot hold gains to save its life. I was bullish on Micron. I was bullish on Micron's earnings. Boy, oh boy, was I wrong. Can't hold gains to save its life. I mean, even this was phenomenal earnings. Gave it all back. I mean, I guess it didn't like almost all back within a week, could not hold gains, could not hold gains, eventually gave all the earnings gains back, clobbered on earnings. Heading into dividend day, I won't be entirely surprised to see some selling after that dividend date into the new year. Yeah, probably just this is one I would expect some selling on into the new year. But we pulled down to this 80, you start to buy it again. If we're able to crack back up, I would love to play that gap fill because it's been, even though it's been consolidating a $15 range that has paid really well the whole time. So if we can get into this gap fill zone, I would definitely start looking for that move up, at least 95 zone, and then if we're lucky, 100 again. We did XLF and affirm, last one. Nice charts tonight, everybody. Wow, look at this thing. See the last time. Here's the last time I was looking at it. You better believe I did not capitalize on that. It's not very helpful, really. What are we trading? 60s, huh? Yeah, let's go see what that did for us. Well, those are probably back 2020 levels again, too. Well, strong name, too. I mean, market did a lot of sideways for a couple weeks, so this is to be ignored. This is to be ignored. Honestly, Ryder, I mean, Friday was just, man, everything was just in dip by mode on Friday. It really was the spot. But above the 62, I like that. I mean, I like it. Staying long there, I like it for sure. If we start to break down, it is a name I'm not opposed to shorting. Honestly, below that 60, you could probably see some pretty heavy selling pretty quickly. At least on 57, 55, 57. Yeah. Nice little spot, honestly. Good eye. Who said this? Miss. Right on. Good eye here. I like the dip by here. Won't be chasing the long up here, that's for sure. It was tricky before. It's kind of the bottom of the consolidation range. We reclaimed this here, 5 EMA, reclaimed that 66. I like it long up there too. Again, you aren't looking for the breakout, but you want to be looking for the breakout at the lows down here. You want to look for the breakout up here. You want to start trying to catch it down here. You don't want to catch it up here. So break back into there offers another nice long entry with really tight stops, same as a dip down to that 63-ish area. Another nice entry with some tight stops. Okay, well, with that, we are going to call it a night. Thank you so much, everybody, for being here. I appreciate it. There's a good amount of us, a few people trickling out, obviously, but good amount for the week before Christmas. Thank you so much, everybody. Have a great rest of your night, and we will catch you all tomorrow. Thank you for being here. You too, man. Thank you, everybody. We'll talk to you soon. See ya.